Ethereum domination is continuing. The money just keeps flowing into Ethereum. The users keep flowing in. The innovation keeps moving Ethereum forward. It's no wonder that so many people are taking such a big interest in what is happening on Ethereum. This blockchain just continues to move from strength to strength. So in this video, I'm going to share some statistics and some news with you that show that Ethereum is just continuing to kick butt and that we are well on our road to that 5-digit Ethereum. $10,000 will come sooner than you think. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you would like to learn some more about, make sure you subscribe to the channel. Gently tap on the thumbs up button for the YouTube algorithm, and of course, click on the notification bell to know when I put out a new video. So let's go ahead and get into it. First, I want to start off by talking about actual Ethereum market dominance. You can see that yesterday, Ethereum was at 19.12% market dominance. That's almost half of what Bitcoin is at right now. So between Bitcoin and Ethereum, they are more than 60% of the market. It really gives you some perspective on what is happening in the crypto markets. But I want to go back to this because this is very, very interesting. This is the start of the year. Ethereum at the start of the year was 10.9%. Bitcoin was 70%. So during that time, Ethereum dominance has almost doubled and Bitcoin dominance has been nearly cut in half. That is very, very interesting statistics. You can really see where the crowd is starting to find interest, where the money is starting to flow, what this cycle is presenting for us. Now, what's another interesting equation, which I don't think gets talked about enough when we start talking about a conversation like Ethereum market dominance, is actually all of the stuff built on top of Ethereum. Now you can see here that if we look at the top coins, we have Bitcoin, Ethereum, Tether. Most of the Tether does live on top of Ethereum, although there's of course a good amount of USDT on other blockchains without a doubt. Binance Coin, Cardano, Dogecoin is at 2.8% of the entire cryptocurrency market cap. That's crazy. Ahead of XRP too, which is, also crazy. Dogecoin apparently is the standard. USDC 1.5%, Polkadot 1.3%, Uniswap 0.8%, which brings me to the next topic of conversation, because if you were to account for all of the protocols like Uniswap and Aave and Compound Finance and others that are actually built on top of Ethereum, you'd probably actually have Ethereum dominance being closer to like 25, 26, maybe even 27, 28, 29, 30%, right? Because all those other blockchains and stuff, most of that is not actually built on another blockchain. Most of the tokens right now are built on Ethereum. Now, this is changing over time. I mean, Polkadot has just... they've just announced that the first parachains are happening for Kusama. So we're going to see all those proxy tokens for Polkadot-based applications actually starting to launch on Polkadot as the parachains move forward. So we'll see, a few of those tokens transitioning over from Ethereum to the Polkadot network where they were always intended to be. But actual Ethereum network dominance is much higher than the 19.12% that is just the key Ethereum asset. So I thought that was worth pointing out. But it's very interesting to see how the trend has been going this year. Bitcoin going down, Ethereum going up. People, of course, are taking notice of what Ethereum has been doing. And look at the money flows. So this is from a few days ago, record $141 million outflow from Bitcoin products signals institutions are bearish on Bitcoin, according to CoinShares. Now, what's interesting is this. The declining institutional demand for BTC has again coincided with increasing institutional appetites for Ethereum. Big money is going harder and harder and harder into assets beyond Bitcoin. And for a lot of those institutional players, they're looking at Ethereum, they're understanding the network, they're figuring out the nuance of what is going on with Ethereum, and they're putting their money in accordingly. Obviously, they're also getting exposure to other assets like Cardano and Polkadot and stuff like this, but to see this massive amount of interest coming for Ethereum, I think is very, Very noteworthy. Also, this one's just a bit of fun. This one was posted over here on Twitter and said there are only 46 million millionaires on the planet. There are only 116 million Ethereum. There isn't enough ETH for all of them to own 2.5 Ethereum. That's just for a bit of fun. We do the same thing with Bitcoin. You know, every person in the world can only own 0.003 Bitcoin, and every millionaire on the planet can only own like 0.4 Bitcoin or something like that. So why not do it with Ethereum too? Just for fun, right? By the way, every single week, my team and I produce Wealth Mastery. It is an investor report designed for cryptocurrency investors. Every single issue, you're going to get a deep dive on an altcoin, interview with an industry leader, a trending coin analysis, step-by-step DeFi tutorial, the latest airdrops, the latest token sales, the hottest technical analysis, and much, much more. All of that for less than $10 a week, meaning that Wealth Mastery is the most value-packed and at the same time the most affordable investor report on the market. Click on the link down below me here in the description where you can learn more about becoming a member today. Now, there's some other big statistics, and there's so many of them, we're not even going to cover them all in this video, but there's been some very interesting things happening. So this institutional outflow of money from Bitcoin and into Ethereum, you can see it's not just institutions, but it's actually the wider market starting to take interest in Ethereum, and you can see where the money's starting to flow. In the last 24 hours, Bitcoin volume was $44 billion. Ethereum volume was $46 billion. And this has happened a few times, but it's very noteworthy because Bitcoin volumes have historically been number one. Seeing Ethereum now doing more volume than Bitcoin on a daily basis on exchanges, this is a big deal. This is showing that money is starting to shift towards Ethereum. That's not to say people are abandoning Bitcoin. Bitcoin obviously still very, very important for investors, but we're seeing this just massive upsurge in interest for Ethereum and what Ethereum is doing. This also a very interesting statistic for you. 1% of Bitcoin's supply has been locked into the wrapped Bitcoin protocol, actually about 1.1% now. So wrapped Bitcoin, WBTC, that is Bitcoin that lives on the Ethereum network. So essentially what you do is you lock up your Bitcoin, they give you a WBTC token, which represents one Bitcoin. So it's not an actual Bitcoin. It is an Ethereum token version of Bitcoin that is redeemable for one actual Bitcoin. But it's unsurprising to see 1% of Bitcoin supply being locked up in the protocol. In fact, I'm surprised there isn't more Bitcoin locked up on Ethereum right now because it's the most useful place to put your Bitcoin. Now look, you can use a lender like BlockFi, for example, deposit your Bitcoin natively. They'll lend it out. They'll give you back a percentage on that. That's nice. We do have Bitcoin-based decentralized finance stuff like Sovereign, which has been getting a lot of press recently, but the rates, lending rates on that are super, super low. Whereas you can actually go to Ethereum-based DeFi, use your wrapped Bitcoin to get some pretty damn good yields on your BTC. I mean, you can get 15%, 20%, depends on what platforms you look into. Of course, I've done a few videos on this topic recently. If you want to learn how to make a passive income with your Bitcoin, with your Ethereum, go and watch the video that I made a few days ago. It was like $10,000, how to make $10,000 a month passive income with your crypto. It goes into detail on how you can take your wrapped Bitcoin or your Ethereum and start making a good income by yield farming or by lending. So go and check that out. But, you know, it's really interesting to see this upsurge of Bitcoin, Gold 2.0, right, the premier crypto asset, being integrated onto other blockchains, into other ecosystems. So this is unsurprising, but of course a good thing to see. We've also had a big spike in Ethereum buying on Coinbase. Now that, of course, is the exchange of choice for institutional buyers. In fact, 395,000 Ethereum flowed out from Coinbase. This was yesterday, June 9th, so that is pretty incredible to see that much buying happening. This is mostly institutional money buying on Ethereum, buying on Coinbase, sorry. Coinbase has been the exchange of choice for institutional buyers. That's where Tesla bought. That's where MicroStrategy bought their Bitcoin, of course. So we're also seeing a lot of institutional exposure for Ethereum happening on Coinbase. Ethereum is also currently settling around 4 times more volume on chain every day than Bitcoin. This is an incredible metric for Ethereum to have passed Bitcoin on. I mean, when it first passed Bitcoin overall, that was impressive. Now it's 4 times more daily volume every single day than Bitcoin. In fact, stablecoin transfer volume on Ethereum has also passed daily Bitcoin settlement value as well. So it's about a quarter of the total volume being settled on chain on Ethereum is stablecoins. That has now, just in of itself, passed over Bitcoin. So we see this real fundamental shift of money moving towards Ethereum. And why is that happening? Well, it's happening for a few reasons. But most of it is because we're seeing this just incredible demand for the Ethereum asset because people want it, they need it. If you want to use any of these exciting decentralized finance applications on Ethereum, guess what? You need to have some Ether in your wallet to be able to do that. Maybe you want to get some staking rewards for your Ethereum. So you take your Ethereum and lock it up. Well, guess what? For that, you need some Ethereum. So you need to go and buy that to get those staking rewards. Future expected innovation. We'll talk more about that momentarily, but this is also another reason driving a lot of excitement into the Ethereum asset. So we actually have this real organic demand. People need Ethereum because they need it to access all these incredible returns happening on the different applications. They also want the staking rewards. They also see this as being, the Amazon or the Apple of crypto. Whereas Bitcoin, of course, the innovation is slow, which, is a feature of Bitcoin. It's like the big golden tank. It's slow, but it's solid and safe and will get where you're going. But right now, the use cases for Bitcoin, inflation hedge and all that stuff, we really need those big buyers to keep coming in and buying, of course, the Gold 2.0 narrative. Obviously, what happened in El Salvador is a big deal if we can start seeing Bitcoin really taking off there as a medium of exchange in day-to-day life, a store of value in day-to-day life, and a unit of account within the country. That would really change the game for Bitcoin in terms of it actually being money, right? Something that people are using as a currency on a regular basis. Right now, we need Michael Saylor to come in and buy some more Bitcoin to keep the choo-choo train going. Obviously, he is buying some more Bitcoin. MicroStrategy's announced they're buying to the $500 million worth of Bitcoin, so that's good, positive to see that happening. But there's real innovation happening with Ethereum that is continuing to drive this Ethereum dominance in the market and this excitement behind Ethereum. We are actually right now a little more than a month away to the London hard fork. Now, the London hard fork is when we're going to see EIP 1559 coming in case you don't know what that is. That's an improvement proposal that's going to basically start introducing a fee burning mechanism for Ethereum. So every time you make a transaction, for most transactions, a little bit of Ethereum will be burnt. That means it'll just out of the supply forever. Now, over time, as the inflation rate falls, as we get closer and closer to Ethereum 2.0, we will actually start seeing a situation where Ethereum could become deflationary. So every year there'll be simply less and less Ethereum. That, price-wise, is a big damn deal. Obviously, of course, Ethereum 2.0, when it finally happens, will be a big deal too. And the fact that we're moving towards an Ethereum 2.0 is in of itself a damn big deal. Investors see what's happening, they understand what's happening, and they're very, very excited about that potential. Now, Ethereum 2.0, part of that process is moving to proof of stake. Now, proof of stake has actually been moved up. So proof of stake was going to be one of the last things that happened, but because of some drama happening with the miners, protesting EIP 1559, what we've seen is the developers of Ethereum pushing to get proof of stake happening potentially by the end of 2021. So we could actually see that merger of the proof of work chain with the proof of stake chain, and Ethereum could go proof of stake by the end of the year, which would essentially be like a 99% reduction in the energy use of Ethereum. That would obviously be a very, very big deal, especially in an era when we see Bitcoin continually being criticized for being an energy hog, which it is an energy hog. And look, I don't agree with all the criticisms against Bitcoin's energy use. It is a useful use of energy that in most situations is underused. But this upgrade for Ethereum will just deal away with all that. You won't have to worry about the energy conversation with Ethereum because it's going to go super green, super fast. Anyway, your question for today, are you using Ethereum to earn a passive income? So are you staking your Ethereum? Are you doing yield farming on Ethereum? Are you lending on Ethereum? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.